Welcome to the deep dive. Today we're diving into a topic that might seem like it's all spreadsheets and skyscrapers, maybe a bit dry,
Yeah, finance.
finance, but it actually touches, well, every single corner of our lives.
It really does.
Now, if that word finance makes your brain do a little skip, maybe feel a bit overwhelmed, stick with us.
Definitely. We've gone through some really fascinating material.
Yeah, and it uncovers the most important and I think genuinely surprising ways finance shapes the world around us. It's not just Wall Street.
Not at all. Our mission really in this deep dive is to show you that finance is, well, it's more than just making money. It's kind of the underlying structure, the backbone of modern society.
That's backbone, yeah.
It's the engine that powers progress, from the personal choices you make every day to the massive workings of the global economy.
Mm.
And the stuff we've looked at, it covers a huge span, ancient history right up to like the really cutting edge stuff happening now.
Absolutely. And to really get how fundamental finance is, you've got to look way back. I mean, further than you might think.
Yeah, the sources take us thousands of years into the past. We're talking ancient civilizations.
Which is wild. What did that even look like back then?
Well, what's fascinating is seeing how even then the basic ideas were already there. Like Mesopotamia around 2000 BC.
Okay.
They were using silver, sure, but also grain for loans.
Grain, like your harvest.
Using your harvest as collateral. Think about that.
Wow.
And then, ancient Greece and Rome, you start seeing early forms of banking, lending popping up.
Right.
It just shows that this need to manage resources, to trade,
Yeah.
it's like core human stuff.
And it didn't stay simple, did it?
Mm.
If we jump forward, these early ideas start having a much bigger impact.
Oh, massively. The material highlights the Medici family,
Mm-hmm.
Florence, 15th century.
The Medici, right? Famous bankers.
But see, here's where it gets really interesting. They weren't just holding people's money. Their financial power directly influenced politics, even religion.
Yep.
Well, for example, their control over the Pope's finances gave them immense sway in the church. That affected everything. Wars, who got commissioned for art, all sorts.
The money was already shaping power structures back then.
Precisely. And if you connect those dots, you see this clear evolution. Finance goes from simple exchange to this incredibly powerful tool.
Fueling trade.
Fueling trade, bankrolling empires, their rise and fall, and it was absolutely central to the Industrial Revolutions.
Mm.
It basically became a foundation for building the world we know.
Okay, so it's been around forever. It's clearly influential. But how does this big thing called finance actually work today? The sources break it down into these core pillars.
Yeah, that's a good way to think about it. Like a building with three main supports: public finance, corporate finance, and personal finance.
Okay, let's take those one by one. Public finance.
Right. Public finance is basically how governments raise and manage money. Taxes, borrowing.
To pay for.
To pay for all the things that benefit everyone. Roads, schools, hospitals, national defense, that kind of public infrastructure and service.
Got it. The collective stuff. So corporate finance.
That focuses on businesses, how they get the capital, the money they need.
To do what? Like expand.
Exactly. To grow, develop new products, hire people, just basically keep the lights on and expand their reach. They might take out loans, sell shares, issue bonds, all that.
Right. Finding the cash to make things happen. And the third pillar, the one we probably all deal with constantly, personal finance.
That's us, you, me, everyone listening. It's how individuals manage their own money.
Income, debt.
Income, debt, savings, investments, making sure your own financial house is in order, working towards your personal goals, whatever they might be.
Now, it sounds like three separate boxes, but the material we looked at really hammers home that they're all, like, tangled up together.
Oh, deeply interconnected. Absolutely. You can't really separate them.
Can you give us an example? How does trouble in one area spill over?
Sure. Okay, imagine a government makes some bad decisions with public finance, maybe runs up way too much debt, mismanages the budget. That can easily lead to inflation. Suddenly, your money buys less.
Right. Hitting my wallet directly.
Exactly. That's a direct hit on personal finance. Makes it harder to afford groceries, pay rent, everything. Or think about it the other way.
Okay.
Say there's widespread corporate mismanagement. Lots of big companies go bust.
Mass layoffs.
Mass layoffs, exactly.
Yeah.
That can trigger a recession, which then slams everyone's personal finances really hard. It's a constant feedback loop between these three.
That really clarifies how they lean on each other. So when these pillars are strong, when they're working well, what's the upside? The sources talk about finance as a driver of economic growth. How does that work practically?
Well, efficient financial systems, they act like a well-oiled machine for progress.
Yeah.
They channel capital money and resources to where it can be used most productively.
Okay, like how?
Well, think about credit. It lets someone with a brilliant business idea, but maybe not much cash up front.
Get a loan, start the business.
Exactly. And that creates jobs, new services, or investments. They provide the funding needed for researchers to develop new tech, for companies to bring those innovations to market.
Right. And things like pensions.
Yeah, pensions support people in retirement, giving them security, which also helps stabilize the economy overall. It allows for long-term planning.
So it's not just about abstract economic numbers going up. It's about tangible things. Opportunities, better lives.
Precisely.
Yeah.
The material makes a really strong point. Societies with better access to finance generally see higher living standards overall.
Without it.
Without a functioning financial system, growth just stalls. People can't invest in education or homes. Businesses can't expand and hire. The whole economy just kind of stagnates.
Looking at it more personally, the sources also brought up this idea of financial inclusion leading to social upliftment. That sounds really powerful.
It is. It's truly transformative. When people who've traditionally been shut out of the formal financial system,
Like who?
well, individuals living in poverty, maybe certain marginalized communities, when they gain access to even basic financial tools, it can completely change their lives.
How so? Are there examples?
Yeah, the material gives some really compelling ones. Think about women in Bangladesh using tiny microloans
Microloans.
to start businesses from their homes. That gives them financial independence, maybe a stronger voice in their community. Or farmers, say, in parts of Africa using digital financial services on their phones.
Mobile money, that kind of thing.
Exactly. To access markets directly, cutting out middlemen, getting fairer prices for their crops.
Wow, that's incredible. So just having access to a bank account or a small loan can actually shift power dynamics.
It really can. It's about providing opportunity, creating a more level playing field, giving more people a real shot at participating in the economy and building a better future.
Okay, but we know it's not always positive. We have to talk about when things go wrong. The sources cover finance during crises, and obviously the 2008 financial crisis looms large there.
Yeah, you can't really talk about modern finance without talking about 2008. It was such a stark reminder of the destructive potential when finance is misused or just not regulated properly.
What were the key triggers, according to the material?
Well, it points to specific things like subprime lending, basically, giving mortgages to people who couldn't really afford them, often with tricky terms.
Right.
And then the creation of these super complex financial products, derivatives and things that kind of hid the underlying risks. Nobody really knew where the risk was sitting.
Until it all collapsed.
Exactly. It created this global domino effect. Millions lost homes, jobs, savings. It was a really painful demonstration of how interconnected everything is and how problems in one corner, like the U.S. housing market, could just cascade worldwide.
A catastrophe. But the sources also mention finance playing a role in the recovery. How did that side work?
That's the other side of the coin, right? After the initial shock, you had central banks stepping in. They injected liquidity, basically pumping cash into the system to stop everything from seizing up completely.
Trying to stabilize things.
Yeah. And governments used fiscal policy spending, tax changes, trying to boost demand, get people back to work. It shows that even after a massive crisis, the tools of finance used carefully are vital for recovery.
And personally.
And personally, it really highlighted how having good financial planning, maybe some savings, acts as a crucial buffer to help you weather those kinds of economic storms when they hit.
Okay, this brings us to a more critical perspective in the material. The idea of the dark side, inequality and speculation. This raises some tough questions about who really benefits.
Yeah, and it's a really important critique. Does finance, as it currently operates, actually make inequality worse?
Does it? What are the arguments?
Well, the sources flag a few key areas. One is asset inflation, when things like stocks and real estate prices shoot up.
Which they often do.
Right. That tends to disproportionately benefit people who already own a lot of those assets. The rich get richer, essentially.
What else?
Then there's a whole world of high-frequency trading, super fast, computer-driven trading.
Trying to make tiny profits really fast.
Exactly. And complex derivatives. Some argue this kind of activity doesn't really create much societal value, you know? It might generate huge profits for a few, but does it help build anything real? It can even add instability. And then there's the fact that often the poorest people, the ones with the least financial security, end up paying the highest interest rates when they need to borrow. That can trap them in debt cycles.
So without guardrails, the system can actually reinforce or even worsen existing inequalities.
Precisely. And that's why the material really underscores the need for effective regulation and also a strong ethical framework, making sure finance serves broader society, not just a select few. It's about finding that balance.
Shifting gears a bit, maybe to something more positive, the discussion moves to environmental, social, and governance, ESG. That feels like a newer development.
It is, relatively speaking, and it's gaining a lot of traction. It's this growing understanding that finance can and maybe should consider more than just the bottom line, more than just profit.
Incorporating values.
Yeah, exactly. ESG investing is a prime example. Investors actively look for companies that are doing well on environmental measures, treating workers and communities fairly the social side, and have good, transparent corporate governance. We're also seeing things like green bonds grow money specifically raised to fund projects tackling climate change.
Right. Funding solar farms or energy efficiency.
Things like that. And social impact investing takes it even further, actively trying to generate positive social outcomes alongside financial returns, often targeting underserved communities.
So it's an attempt to align money with making the world better, essentially.
That's the goal. It suggests a potential path where finance could be a really powerful force for good, channeling capital towards a more sustainable and equitable future, if it's done right.
Which leads us to the final section, the future. Decentralized finance, DeFi, and AI. This feels like stepping into, well, the unknown. Huge potential, but maybe big risks too.
Absolutely. We're definitely seeing technologies emerge that could seriously shake up the financial world as we know it.
Like DeFi. What's the core idea there?
Decentralized finance, or DeFi. The basic aim is to make financial services more accessible by cutting out the traditional middlemen.
Like banks.
Yeah, potentially. Imagine borrowing or lending money directly to someone else, maybe anywhere in the world, through a platform without needing a bank in the middle.
Opens things up.
Potentially, yeah. Could bring financial services to many more people. Then you have AI, artificial intelligence.
How's that fitting in?
Well, one area is things like AI-powered credit scoring models. The hope is they could lead to fairer, more accurate lending decisions, maybe looking beyond traditional credit reports.
Interesting. And tokenization.
Asset tokenization, yeah. That's the idea of representing ownership of assets. Think real estate, art, maybe even a share in a small business as digital tokens on a blockchain.
Making them easier to trade.
Exactly. Potentially unlocking huge amounts of global capital that's currently tied up in illiquid assets, making markets more efficient.
Sounds pretty revolutionary. But the material also flags downsides, right? Uncertainties.
Oh, definitely. And it's crucial to be clear-eyed about those. The DeFi space, for example, is still very new, largely unregulated, meaning it's more vulnerable to scams, hacks, security breaches. There are also broader worries about the lack of regulation generally in some of these new crypto and AI areas, and the potential for misuse of personal data, algorithmic bias.
There's lots to figure out.
A huge amount. The next decade is going to be absolutely critical in shaping how these technologies develop, what rules get put in place, and what their real impact on society will be.
So, wrapping this all up, the sources we looked at conclude that finance is society's lifeblood. That's a really strong statement.
It is strong, but when you step back and consider everything, the history, the pillars, the impact on growth, inclusion, crises, the future, it's hard to disagree, isn't it?
Yeah, it seems fundamental.
It's not really optional in the modern world. It's the mechanism, the plumbing, baby, through which so much happens. Aspirations become reality, ideas get funded, policies get implemented.
And ultimately, the takeaway seems to be this dual nature. Finance has this power to uplift, to build.
Immense power.
But also the potential to destroy, to create harm.
Absolutely. And its impact really comes down to control, doesn't it? Who controls it and how responsibly, how ethically it's wielded.
It's not inherently good or bad.
No, it's a tool, and its impact is shaped by our choices, the rules we make, the values we prioritize.
So as you, our listener, think about this deep dive into finance and society, we hope it's given you some valuable insights, maybe a few of those aha moments.
Yeah, it can feel complex, finance, but understanding its role is just so important for understanding the world.
We hope you'll consider how interconnected those pillars really are, public, corporate, personal, and how things happening in one area ripple out and affect your life, your community.
Definitely.
And maybe, looking forward with all these changes coming DeFi, AI, the big question to chew on is, how do we make sure finance actually serves society's broader needs? How can it help us tackle the really big challenges we all face?
That's the crucial question, isn't it? Something to keep thinking about long after this deep dive is over.